In a world where hopium and common sense collide, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boy CryptoKeeper here on a beautiful Thursday night. It is TA Thursday, around the charts, ready to get after. We got some guests tonight. The one and only Crypto Blood. How you doing, brother?
What's going on? Always a pleasure.
This is the first time we've had Blood on for TA Thursday. He's got some good stuff going on in the background. We're going to talk about that here in a little bit. We've got, as always, the range trading king, 47 out of 50 this last month. Magic Internet Money. What's up, Magic?
What's going on, man?
Good to see you. Good to see you. And as always, you know who it is, Gareth Soloway. Gareth, how has life been treating you recently, brother?
Good, man. Busy, but busy keeps me out of trouble, you know?
I hear you. I hear you. So we're super excited tonight, guys. We've got some interesting stuff going on in the charting world, and you know, we bring together the best to find out what's actually going on, because I'm not the one that's ever going to bring that alpha to you. These guys are. That's why we do your thing. Hey, make sure to smash the likes. As always, these guys are spending their hard-earned time, which ultimately I feel like that's one of the things that you can donate
and get back,
that you cannot get back.
You cannot get back.
That is correct. So make sure that you jump onto all their channels. Their channels are down below. Their YouTube channels specifically are down below the video. So when you get off to smash the like, make sure you switch over and follow all of these creators. Well, without further ado, let me show one thing here. We are trying to really grow our Danger Close Alpha Twitter. So I want to show this real quick. Danger Close Alpha, Danger Close Alf without the A. It's at Danger Close Alf without the A, because we didn't think it through. And yeah, it was too long of a Twitter name. So there we are. We are really trying to grow that following. We just had our bug out drop. We have got a bunch of people. I think we've sold 360 out of the 500 that people are going to be attending an IRL event, whether it be virtual or not. And just as tossing out there, from here moving forward, it was actually as of yesterday, I think, moving forward, everyone that buys one of the bug out bags, the bug out bags have been dropped from 0.1 to 0.02, because now at 0.02, everything is virtual. So there's no more tickets that are going to get you to the event actually in real life, but it's going to get you virtual. And we've got a lot of options there. So if you guys want to check that out, dangerclosealpha.com. Okay, cool. Let's get into it. Let's kick it off. I want to just check on the markets, see what anything, see if anything is anything here. We've got the global crypto market cap still under $1 trillion, 984.1 billion with a V. That's up 0.32%. Guys, I'm not going to waste these gentlemen time. The market looks pretty flat today, and I want to hear why we are looking so flat. So let's kick it off with this is Blood's first time on here. So Blood, talk to me short term about what you're seeing in September. September has been a month that I've been hearing a lot of chatter about. Is there anything that you're looking at September-wise specifically that you want to talk to the people about?
Well, you know, I'm primarily a quant trader myself, and maybe we'll get into some of my quant trades later. Okay. But fundamentally, you know, it's primarily the Fed's show. You know, we got to watch what the Fed does. We saw Jackson Hole 8-minute speech from our buddy Jerome, and that's a black name. And every time I hear Jerome, I'm like, Jerome? Oh,
up,
Jerome
brother?
Powell. Oh, okay. Oh, Jerome Powell. Okay, all right. But yeah, Jerome Powell is, you know, that shocked a lot of people. I guess it shouldn't have shocked anyone. I mean, I think the markets have been, for the last month or so, very misguided. They're delusional, irrational exuberance, I guess you want to call it. That's what Greenspan used to call it. Mm-hmm. I think they misread the Fed, and the Fed came out, said, hey, we're going to continue to raise these interest rates. So I think short term for September, whether it's 50 basis points or 100 or 75, I think now the market is finally coming to the realization that you know, money is going to get more expensive every month until the end of the year, going into the new year.
Yeah. Gareth, talk to me about that. You've done a lot in the legacy financial system as well as obviously crypto. But talk to me about how basis points. I know a lot of times people will jump onto a stream like this and they will pick and pick little pieces up that they do understand, they don't understand. Talk to me about 50 to 75 basis points, 100 points. Talk to me about what do those basis points really mean, and what's the difference on if they go 50 points versus 75. Talk me through that.
Yeah, so 25 basis points is 0.25%. So it's really small, right?
Mm-hmm.
But the key is when you map it over a many trillion-dollar economy, it actually does have an impact. And I think that's the key. So I mean, it sounds to us, whether you get a mortgage at 5.1 or 5.4 or 5, it doesn't sound like a huge difference, but it actually does make a huge difference. And the market, we know the markets and investors are addicted to that cheap money. It's like a drug addicted person. They just want that juice. They want that over and over again. And what the Fed is doing is pulling back on that, right? So it creates this kind of angst, this decision that investors have to make. And this is why, by the way, you see risk assets sell off when interest rates go up, like crypto and stocks, is because what's going on is as interest rates rise, there are certain people that say, I could get 3% in a 10-year, and that's better. That's for no risk. I'll take my money out of risk assets, because in risk assets, you could make more, but you could also lose a lot too, right? So the higher interest rates go, the more it lures people away from risking their money in risk assets. So that's really what it comes down to there. At this stage, it's all about tomorrow, right? So we saw, first of all, today was an interesting day on crypto because you saw the dollar surge and crypto actually held up. That's actually the first time I've seen that happen in a while. Now, tomorrow we have the non-farm payrolls number, which is a jobs number, right? It's the big monthly jobs number. And the reason why that's so important is because it is going to determine, like if it's a really strong number, 75 basis points in September from the Fed is coming. If it's a little bit weaker, then maybe it's just 50 basis points or maybe it's 25. So interestingly enough, I think the economy or the investors want a slightly weaker number, not so much that it's like, oh my God, we're going into like a Great Depression. Like that would be bad, but kind of like that Goldilocks number where it's not too hot, not too cold, kind of right perfect, where it keeps the Fed from doing too much in the near term. So tomorrow, 8:30 a.m., watch for that number. You can literally have the dollar chart up. You'll see it go nuts. And then the markets will react off of that.
I just want to say something real quick.
Ahead,
I think because we have been trending in a very tight range for the last week and even last week. I mean, we saw one step down at the end of last week, but it's been a tight range, right? And then a step down in tight range. I think this is what, at least for crypto, we're looking for something, whether it's good, bad, or indifferent for the non-farm tomorrow. You're going to see some huge action tomorrow, I think, in the crypto space.
Yeah, I 100% agree with that. Yep.
I'm interested to see how this plays out, and I want to ask you, Magic, how do you or do you trade on information like this? I know sometimes people will say, I am so strictly technicals that I'm not even going to trade on that information. And I know a lot of times from what you've told us, you're technical, but how does this affect? You said you traded a lot this last month and absolutely crushed it. So now we've got some big information coming out. How does that affect what you do tomorrow? Do you think that you'll be trading this tomorrow? Not. And if so, what's that look like?
I will probably trade it just like I trade every other day. I know that sounds kind of terrible. I'm going to go into it. I'm going to mark my levels. But on days where we are having a news event, I generally do spend more time on the order flow. I spend more time watching what people are actually, where's money actually going. The last event we had at Jackson Hole, it was a really weird case with that pump. And then as the dump started coming, I mean, it was like, I was kicking myself because I preset my trades a lot where I'm like, okay, I'm taking profits here and here, because that's what you do as a trader. And I mentioned in the group, I was like, I really should have held that short because I think this thing's going to nuke. And of course, it just straight through the floor. And a lot of that has to do with what he said. But we don't know what he's going to say going into that meeting, So it's one of those things where you take the information you can. I got a win out of it. I didn't FOMO back in. It doesn't change the way I trade too much. But I do spend more time on the order flow watching what's coming into the market real time because people do react to news. It really does, when the Fed comes, I call it policy, less news, but it's the same thing almost. When that kind of information hits the market, people that really move markets, they do just that. Either they're going to participate or they're not going to. And you need to be able to figure out which side of the coin to be on because you don't want to be that guy trying to catch that knife. If they're all like, we're going to sell this down, like if you're not on the right side of it, you're just best to leave it alone and wait for the next opportunity at that point.
I think it's really interesting. You say you don't want to be the one to catch, trying to catch that knife. You've heard us talk about it. You've heard traders talk about it a lot. It's catching a falling knife, trying to catch that on the way down. You usually end up getting cut, right? You end up bleeding, right, Blood? So talk to me, Blood, about on a day like tomorrow, is there some on the chart? Is there something that you would look for? It doesn't have to be specifically just tomorrow, but is there either something that currently you're really looking for to happen? Is there a range? Is there a number that you're looking for? We can do Bitcoin or ETH. Talk me through kind of what you're looking at right now.
Yeah, so I just shared my screen there, and you will see last week I had a range for us that we saw the 1, 2, 3, and we, like Magic said, we had the pump fake out. That's typically what happens. The market squeezes everyone out and goes the opposite direction. When I saw that move down, I said, yeah, we're going to break that channel. I knew it was coming. But if you just move this triangle, this rectangle down, I can just move this back right here. Almost matches perfectly. Look at that. That was the first time I ever did that. Seriously, we're in this range. So really what you're looking at is anything you can, if you are a manual trader, you can set your orders above this area and your orders below for a sale below the market and one above. I wouldn't put it right there, put it a little bit above it because you may have some whiplash like we saw last week. So that's how I would play it. The bottom side go short at 19,491, and on the top side go long at 2,065.4 roughly.
Okay. That gives me a good idea of kind of where your head's at. Gareth, are you looking? So tomorrow we get that information coming in, like we've talked about. You're looking a lot at legacy stuff to combine and kind of play into crypto. Are you still watching Bitcoin right now as the leading indicator, or with the ETH merge coming up, is that kind of maybe catching your eye a little bit more? Are we still watching the big dog Bitcoin? If so, what's that kind of look like for you?
Yeah, so for me, I watch Bitcoin still. I think that you get a little crazier action because of the merge coming with Ethereum. So it's a little like for instance, Ethereum's rallied well over 100% off the lows from June all the way to the recent highs, while Bitcoin did much less. And I think that had a lot to do with the merge. And Bitcoin generally moves bigger anyways, but that was a huge move on Bitcoin, over 100%. But I would say going into tomorrow, what's really cool, and I'll share my chart here, is that you basically see that this big down candle here was 2 Fridays ago. Then we basically did nothing. Then last Friday, this was the down move. And then notice where we're hovering. We're hovering right on the 2017 highs. This trend line, 19,500 to 600 area. And then we've gone sideways again coming into this Friday. So it's the last 2 Fridays have been huge moves, both down. And here we are sitting on this pivotal level going into this pivotal jobs report on a pivotal Friday where you're likely going to get a big move. And I think again, this is going to be a determining factor for whether Bitcoin can actually see a rally up, or is it going to get punished to the downside, and we're going to see more downside here. So I think again, it's everything setting up to just have this big event tomorrow. Again, it's hard to trade these things for me because I've seen so many times and I've experienced where it goes one way, then it rips the other way, and like you jump on one way, and then before you know it, you're right, then you're wrong. So so for the most part, I'm a spectator. I have my swing positions already in, but it's hard for me to trade this stuff.
Yeah, I just got back from Vegas. I was out in Vegas for an NFT event, was speaking at a conference out there, and every time I saw people playing at the tables, I actually did a video. I didn't even post it on TikTok. I've got it in my drafts, but I basically sat down. I was like, I got talked into doing some slots. I sat down, I was doing some slots, and I was like, listen, first of all, I didn't even want to sit down here. But second of all, I knew the house always wins here. Like, what am I actually? I'm just donating. And I'm like, here you go, Caesar's Palace. Let me just donate money to you, right? So Magic, how do we not donate money to the bigwigs in the market tomorrow? What's a good kind of way that you kind of try to hedge or at least position yourself to be looking at some possible upside?
So how I traded today and even last week during like the Jackson hole, I'll go over it. So this is something that anyone can use. I set up a weekly initial balance right in the middle of the week. I give it to my group. I'm like, hey, these are our levels. And you can actually spot almost the entire week's price action off of these 2 levels going forward for the next 6 days. So it doesn't always pan out that way, but these are your initial balances for every single week in Bitcoin's history. And we just trade them accordingly. So essentially after we have our Monday price action and we have our initial balance, you can trade these, going into news even. So like last week, if we go down to like a 5 minute where he was saying it's difficult for me to trade this, you get some whiplash.
Do you have this? Do you have this pulled up or no?
Oh yeah, I do. I'm sorry. I forgot I had to share my screen.
Yeah, just hit share screen. I was gonna say, I know you got a chart pulled up in front of you right now. Let me see what that. Let me see what that looks like. All right, here we go.
So this is the weekly initial balance. Basically, I was telling you about. Like, if you're in the group, you know exactly what I'm talking about. But once you have it, it works a lot like an initial balance on like a low time frame, except it's much higher. So this was the initial balance we've had for this week. It's played very well.
Let me stop you, Magic. Just for the people that don't know, what are you considering a quote initial balance?
So a traditional initial balance is the first hour of price action in a day, right? So that's what you want to see. They call it the cash session sometimes. And if you're trading like a session, like just the New York, Asia, or London, it's the first 15 minutes. And that is going to establish some boundaries. And you really want to see what happens inside of there. Some people call them orb breakouts, which is an open range breakout, whatever you want to call it. But what you'll see is consolidation in here. And then once this breaks, you'll get expansion. So this was a very clear case of actually sweeping the high right here as a swing failure pattern, right? So we knew that was an area of interest. But if you were to go back to the last week, this is where you would have known to get short. You're playing this initial balance basically the entire week. This is basically where you're looking to get out of your positions. You hovered around here till the EQ, you came back above it. And then once you got that sell off and this heavy, you're targeting the low. That's where I was taking profits, was basically from shorting on acceptance from 21.5, closing it out right around 20,870. It's only a day trade. However, holding it for longer probably would have been a little more beneficial, even,
but you never know.
Well, you kind of do. The context
know, right?
for the range rotation was there. We knew the overall range. We were targeting 19,916 at a minimum. And then you come into this week. And so you can see this is this week's initial balance we've been trading. And we actually expected a sweep of 19,802.50 overnight. And then I think it was 19,794 was the previous day low. So we were looking for that sweep of those two lows specifically into support. And the weekly opens here, of course, as well. I think the previous week low is here. There's a lot of things to kind of like work off of. And then from there, you're continuing to play the range until you get expansion. So for me, that's what I'll continue to do. Now, in terms of the overall move, you have to look at this. You've swung failed the previous week low, which the indicator on that was actually Ethereum. You hinted at it earlier. I wrote it down to make sure I went over it. Ethereum had already swept its previous week low before it made its move back up into a hand calculated pivot right around like 16 and some change. But Bitcoin had not. So Bitcoin actually came back down, finally swept the low here. And this was a really great trade we got in on. And then looking for this one here as well. The thing is if you were to lose 19,802.50 on a closing basis, like turn this into resistance, you were probably looking down to 19,301 and then 18,880.50, which for me is a pretty important level on the Bitcoin chart. You can see right here, it's just an old swing failure pattern. This is where a lot of liquidity is going to lie. There's a ton of stop losses down here. So you want to see these levels defended because you are at the overall range low. So this was like what I was indicating, where if you wanted to turn it into a swing trade, you could have, because you were losing this and now you're looking towards the low of the range. You had TPO value areas down there as well. But in terms of a move like this, as long as these lows are holding and you're holding structure, a news event can happen where you get a nuke like this right here. However, I'm actually looking for this to carry on potentially, if it can continue to hold the range, up to about 21, I would say 4 to 21.6 at the most. And then I want to really reevaluate it, because that to me is what you're looking at next. He touched on the 4 boxes that you could have. You could have a box here and a box here. I would put another box up here. A guy in our group illustrated it really, really well. So I'm going to kind of steal from him a little bit with the boxes. But you put the box here. So you've been consolidating in these areas, right? And what you're looking for now is, we talked about coming up here. If you're looking for, like a swing short, you're looking at this in terms of, can this expand up into these resistances? Because these are statistical targets. You've got a biweekly pivot there, which hits at an 87% rate. It's a hand calculated one because there's no indicator for it yet. And then there is a monthly there that is off just like standard pivots, and that hits at almost 80%. And you've got an NPOC there from August that we left over, and you're trading within all those ranges right now. So like, it makes sense to come up here. And then the question is, are we going down after that, or are we doing something like this? That's the question.
I've got one for you, Keeper. I'm sorry, were you done, Magic?
Yeah, go for it.
Okay, I got one for you, an old school strategy I used to use in the FX time periods. It's called like a bull or a straddle, right? A straddle trade. So
Okay.
we're perfect. Like right now would be, it's not financial advice. I'm just saying, if you're, you want to play both sides, you literally are right there at the 50% marker on this channel. So you can literally go put a long in here and put a short in here and just put a stop loss for your long right outside the channel at 19, the numbers I told you, 1943-ish or whatever, and then put a stop loss on your short above the channel. That way you're hedged in there, and you don't have to sit there at the desk tomorrow. You'll get tapped out of one, and then you'll just ride the other one out. So that's one strategy that you can use as well tomorrow.
So that actually brings I'm glad that you said that, Blood, because what I was going to ask to anybody, and anybody can grab this, I think that if you were in when the bull market was rocking and rolling, everybody gets really greedy, and so these moves are huge, right? We see these, I mean, we're looking for 2, 3, 4, 5, 10, 50x moves on certain things right in the markets, and we're not seeing huge moves like that right now. So the strategy that you just talked about, Blood, has you hedging, and basically one of those two you're going to get stopped out, or most likely the other one it's going to move the opposite direction. So are you basically saying, hey, I have no idea what's going to happen here, but I have a strategy that could possibly make me something other than just a direct loss? Is that kind of a strategy when you're really unsure?
That's absolutely it. We used to use this strategy in news events, leading up to news events in FX. So that's the easiest way to do it. It worked very well, very high percentage rate. But again, you got to put those stop losses well above the channels, because again, it can spike up and then come down and spike down and go both ways. So you want to be wide enough above and below that channel to take advantage of that for those stop losses. But it works, man. It definitely works.
That's a really interesting strategy. I've seen people do it, but I think that the greed thing that I was talking about is what stops people from making a decision like that.
And one thing you mentioned right now, like that's the thing with traders, even ones that have been around for a while, you lose most of your money in a trend, in a sideways market. All traders, that's where you lose your money.
Missing on the long, missing on the short, missing on the long.
Well, no, I mean, there are thousands of strategies out here, right? Magic uses some real complicated stuff. I'm sitting there like, I'm like, what the hell is he talking about? But there are many strategies, and it's working for him, right? But you have, if you have a very consolidated period in the markets, you're going to get back and forth signals. Back and forth. And, typically you'll see guys, we churn. Okay. And you go back, forth, you get stopped out. So you lose most of your money in a sideways market, but you just got to capitalize on those moves when it really moves. And that's why we love crypto, because when it moves, unlike FX, a 1% move in FX was gorgeous. I was like done for the week.
Wow.
We get that in a day. We get that in a couple hours.
20 minutes.
So, so you hit right on crypto. It's a 5, 6, maybe even more percentage moving in the right direction. So So
Gareth, having that type of information, seeing kind of what Blood's doing, seeing what Magic's doing, you said that you kind of sit on the sidelines. Is there something specifically that you're looking at right now? And this doesn't have to be tomorrow, but is there something specifically that you're looking at right now to say, hey, I'm getting my feet wet, I'm getting my hands dirty, let's get in there and rock and roll? Do you have anything in particular that you're looking at?
Yeah, so I think I agree with what these guys are saying, is that like I love how you're saying, Blood, how you have to put it far enough above and below, because I mean markets just eat you alive like that. And just to go back to that real quick, I think the best example even was on Bitcoin over here, right? So this trend line was the infamous 2017 high, right? Everyone was like, oh, it's, by the time we got to like 30, 28, everyone's like, oh, that's where it's going, right? So notice how on this day you closed below it. So anyone who had bought at that level and saw the close below, then they're stopping out, right? They're like, oh, it broke. Oh my God, it's going down to 10,000 now. Then what does it do the next day? It goes the opposite way, back above. So then all those people that shorted below that line thinking it's going down, now they're getting stopped out the other way, right? So it's just back and forth. And they did it like here, and here before you kind of got that little uptrend. So it's just so crazy how that works and how the charts do that to you. But that's why you have to be prepared for these kind of overshoots when you do strategies like that. For me, it's definitely just noticing the bigger trends. So like like when we're coming into a news event, I tend to go to bigger time frames because the bigger time frames will kind of smooth out the whippiness of that particular move. So you might go to the weekly chart instead of the daily chart, or even the monthly, and you're getting a bigger view of what's coming versus just that craziness from that particular day. So I think that's one strategy to use. Whatever time frame you're trading, just look at the bigger time frame and say, okay, is there something bullish here or bearish? And if there's a bullish pattern, maybe you whip down on some news, but then it could recover later on because the bigger macro pattern is telling you it's going up. So I think that's the best strategy for me.
Am I not looking at on your chart you just had pulled up there, Gareth, just real quick? Am I not looking, just to show the people, I'll pull it back up. Am I not looking at a huge bear flag right there, or am I just reading that incorrectly?
No, that's exactly what this channel was. And by the way, these lines are perfectly parallel, so it just shows you how the markets work. But this is a big bearish pattern. Now we've broken down. This was another bear flag here. This is not the prettiest of ones. It's kind of a little bit of a rounded one, so it's not as secure, I would say, as the previous ones. But I mean, this pattern, absolutely. And you can see it repeating, right? Here was another one, and look at what price did. And then here, even right here, right? So, I mean, if we just, and this is why learning charts is so important for traders, is because you see these things just repeating over and over again. So here was another bear flag, and look at what price did. Interestingly enough, look at over here. Remember in 2021 when we had that initial big fall, and look at the angle. So everyone was like so shocked when this thing broke out. And then over here, they're like, oh, it's doing the same thing. But it really wasn't. It's actually, the angle is totally different. Here was a downsloping channel. Downsloping channels generally will eventually break up. Upsloping channels are bearish. They'll eventually break down. So again, it just comes down to, like, you just pick up little things here and there in the charts, and it can really revolutionize the way you trade, or at least how you pick up on things.
So Magic, no, that's a great explanation, Gareth. Magic, I saw you get a little shit-eating grin on your face when Gareth was just talking about that bear flag. I'm wondering, are we seeing a little something different in the charts, or you've got you love what he said?
I had to stop myself from putting it in the private chat for all of us. I was going to say that we'll call it the Vitalik bear flag, but because it was extra long, yeah. But I was like, yeah, we'll keep it classy tonight, but. Yeah, here we go. One thing Gareth was talking about, I do want to touch on. This actually will make sense to a lot of people. I'm going to pull up the order flow and talk to you a little bit about, like, when he said you go below the 2017 high, and then once it goes back above there and goes back below, people are underwater. It's running their stops. That's how I trade. You guys know that by now. And so the order flow for today, after we took the lows and we went down into support again, you can actually see that this is the delta, this line right here. And so what that's telling you is that if you were to add up all the market executed trades, buys and sells, you get a delta. So this is a very simple terms of, you can see that the delta is trending down, meaning that we have a lot of negative pressure. There's a lot of people selling down here, but price is making higher lows. So what that is telling you is that someone is sitting here and they're absorbing these people selling. A larger participant is actually pushing the price up. And eventually these guys will turn into fuel for further upside. It's how short squeezes get started. I'm not saying this is going to start into a new short squeeze, but what I'm saying is eventually either they're going to be stopped out of their position and forced to buy back in at market, which is not an increase in open interest necessarily, but it does still push the price a little bit higher. And that's what we mean by fuel. And so that's kind of the tricky thing where we talk about stops. When you come down here, you have a culmination of, once you go down here, you have people selling, but then you also have people being stopped out of position. So they're being forced to open longs because they might be, or shorts. So they might be market selling into a bigger person or a bigger entity that's actually absorbing all of this. So that's the benefit of order flow. That's what I mean by on, news-based events. That's why I watch this.
And sorry, Magic, just to jump in, so when you say buyers and sellers and how to recognize that, are you saying that when the bid gets hit, that's a seller, and when the offer gets hit or the ask is a buyer? Or how does the
this is only market orders. This doesn't show you limit orders at all. So I don't watch any limit orders or any kind of heat maps, anything like that, because you can do smart DOM trading, but in crypto you can do spoofing and stuff pretty regularly. For me, I use market executable data because it's just a little bit more reliable, I've found, in a back test as far as percentages go. So what I'm looking to do on a strategy like this is when we came down and we made the low, right? You can see right here, we made the low, and I keep track of time and how fast we're making that low. And you can see that we're coming in with 5 million. Oh, the new day just started, so I have to refresh it here real quick.
We were headed somewhere, but then
yeah, when the new day starts,
you
have to refresh the screen. Unfortunately, we had a new. So these are 5 million volume candles. They're not based on time. They're only based on volume and how fast volume is entering the market. And so generally, when you get a fast shift in market executed volume here at the lows, 14 seconds is pretty quick, and you have 3 million, and you can see that there's 2.5 million here at the lows, and you can see people shorting because these are selling imbalances that have been executed. I can see where people are actually selling out of their trades. I can see if it's open interest and it's actual money coming into the market where people are selling, or if they're being forced out of the trade in terms of, hey, this guy was forced out because the stop loss got hit. We can look in the open interest and actually see that information. So you're watching this, and then as you see the buying imbalances start coming in and the higher lows start coming in, along with absorption of new sellers trying to enter the market, you have a pretty good idea that the trend is changing, and you can kind of jump on board as a day trader. But I use this in macro swings as well. Like if I'm looking for a macro area, this is how I find my entries. And it kind of secures one thing, that I know that if we put these new buyers that have come into the market in this instance that form this low underwater, price is likely to go down. So I know where my stop loss is going. I know what my risk is immediately, and I'm confident that the trend is, going back to, I believe in this case, we went back to the previous day value area high, which is just a range rotation of the day. I'm going to get rid of the developing day here real quick. But yeah, there's your previous day value area high. There is your local high there. So all you were looking for in that instance, once this trend started, was can I get back above 19,811.50, which the level for us was 19,802.50, based on market structure that we'd identified the day before. Once you're there, you're just targeting the previous day point of control, previous day value area high, and that's your day trade. You can turn those into swings though. They can turn into swings. It just depends on the context. But yeah, that's how.
This is a complicated strategy that actually, and I'll tell you, because I'm in. Oh, let me take this off. Because I am in their Discord group. It's not as complicated as it seems. It's very complicated on the front end when you have no function or understanding of what's actually happening. And one of the things that I will say that Leading Crypto and Magic and CBO do really well in their Discord is letting their people know, hey, the teaching. So if you guys are interested in that, definitely reach out to them. It is a lesson in a different way to trade. But I will say,
I've never seen that.
He's done.
So this was actually
really
only
well
available to institutions up until 2018, and then after that, you could get it on Sierra charts. It was like $1,400 a month, the data that was coming in. But you can go to like Exo Charts or ATAS, and you can get this for like $20-some a month. I have no affiliation with either one of them, just so you guys know. It's not like a plug. But really great charting platforms that can give you information that is super useful real time if you're looking to enter a position,
And see, Keeper, that's what markets are all about. You have I have a certain strategy. I use my quant algo, and we'll go through that in a second. Magic has his, Gareth has his. They're working strategies, but they're all different. Yeah, that's what makes up markets,
Well, talk to me about that, Blood. You talk about quant trading. I know there's going to be a lot of people in the chat that might say, well, explain what he means by, what's he mean by quant trading? So talk to me, as your first time on the show. Talk to me about the quant trading and what kind of the strategy behind it looks like and how that generally looks for you. I know what you're talking about, obviously, but tell the people what exactly you mean there.
Yeah, I mean, it's automated trading, right? You program your strategy onto the chart and you run it. And the great thing about quant is I can run my strategy backwards in time and show the performance. Now, does that mean the future? You can back test it. Does that mean the future results are going to be there? No, but at least it gives me 2 years, 3 years, 4 years worth of data to show, okay, this system actually works, not just month by month. I have a programming background, but I'm also a trader, so I kind of merge those two skills together. And I've been building those types of systems for a while now. But if you take a look at, go ahead.
Well, I was just going to say, and is the idea, I know you're about to pull this up, I'll pull it up for you, but is the idea to just be as much above that 50% as possible while just being consistent? Because as I was saying earlier, I think too often, and I'm guilty of it. I told you this, Blood, when we started talking about Bloodalytics, which is I'm sure what you're about to pull up, but I told you, I said, man, I always screw myself over because I see a move happen. I played it correctly, and then I hold too long because I got greedy. This has always been a problem.
It's two things with any system. Okay, with Bloodalytics, I'm going to tell you out the gate, it doesn't matter if you're trading quant, it doesn't matter if you're trading volume orders, like Magic, or if you're trading fundamentally and with technical analysis like Gareth, very simple charting, no indicators. That's what I do as well. But all of it means nothing if you don't money manage. The money management is the first thing that you have to master as a trader, because you can be right, or you could be right over a period of time, right? But be greedy, and you can take one bad hit that takes you out the game, and now you miss the next sequential number of winning trades for you. If you don't have any chicken, you can't fry.
Right.
You can't.
Nobody's coming to the cookout.
Ain't nobody coming to the cookout if you ain't got no chicken. So you got to stay in the game. And the way to stay in the game is not to say, I'm going to bet it all on black for this one trade. And no, that's not how it is. So with quant, I don't know. It's kind of hard for us to see because our thumbnails are there kind of blocking my chart of performance there.
Let me see if I can do this.
Yeah, there we go. There we go. So this is the Bloodalytics algo for Ethereum versus USDT. And this one goes back to, I think the first trade is how I have it mapped right now is going back to March. If I scroll all the way down to the bottom, first trade was March 1st. So this shows you like all the trades for my strategy all the way back to March 1st. And it just gives you, it runs it backwards. What I've programmed, it runs it backwards. And it shows you all the stats and everything. And you can see for yourself, okay, this is a working strategy. I can even do deep back testing. It takes us back even further, going back to year to date here. And it shows you up 346%.
Wow.
And that's, you say, okay, 300, that sounds great. But guess what? If you would have bought and held, you'd be down 57% with Ethereum. So that's the delta there is humongous. Now, of course, you're not going to make every trade, but this gives you an idea of, how quant works. You base it on historical data. And, one other thing I have to mention here, I do include commission. Be careful with strategies that map out a nice curve for you, and it doesn't include commission, because that's not a realistic scenario for you. So yeah, you just, Bloodalytics, you get the signal in Telegram and you make the trade, either go long or you go short. And
it's really straightforward.
Takes the emotion out of it.
Yeah. I do like, so we currently on Debate Crypto are, I'll tell you this, I love Blood. That's my boy. I have not yet done enough with it to say, hey, boom, got my stamp of approval, but we're using it right now. And so far it has been profitable for us. So we're back testing that before we,
I told him, hey, back test it first, then, show it to your, I want you to understand, how great it is. So
yeah, no, I definitely love that. And for me, I think the great thing for me personally is exactly what I was telling you, is that I suck at being either overzealous or a little bit too shy, one way or the other, because I'm, letting my emotions play into it. And so one of the things I really like about that is, either making no gains or just kind of losing some money as the market bleeds off sucks, versus if I could be 61% profitable and just kind of, chipping away and maybe bringing my stack up.
Yeah, so I'm 61% of the trades were profitable. Absolutely.
Yeah. And that's
up over 300% for the year.
That's a winner. So let me ask,
very low drawdown. Let me one more thing, because drawdown matters as well.
Yeah.
So if someone is trading extremely over leveraged, they may be up 300%, but their drawdown was 90%. Who the hell? Who's going to stay around and see their account go down 90%?
Right.
That's not a realistic trading strategy. So this is 23% drawdown with 360%, 320% gains.
And essentially what Blood is saying there, for any of the new people in the markets, he's basically saying that they are putting tight stops like in there, and the moves don't have to be quite as wild, and they're taking profits. They're taking half off the table. Okay, boom, move on to the next portion of that trade. Okay, you know what? We got stopped out there. That's okay. On to the next one. And we're taking smaller chunks as we move forward.
Yeah, I remember you asked me, why are we taking, half our position off the table? That's just from me, years of experience, seeing me. I'm scarred, bro. Like literally, I've been up in Forex. I've been up like 200% or whatever, and it just takes all of it back, and I lose money. Mentally, that is not healthy. It's horrible. So I want to take half off the top, lock that in and then let the rest ride. So that's kind of why I coded that into the strategy.
Yeah, I love that. That's definitely helpful for me. If somebody can kind of take the thought process out of it for me, that's great. So let's do this kind of a round table here on the way out. I want to know, give me a minute, 2 minutes, whatever, just a couple minutes or less. Where do we see the four of you? I'll start with you, Magic. Where do you see the market going between now and, let's just say, the end of the year? And again, I'm not asking for direct predictions. I'm asking for kind of a, do we have any directional feelings on what's happening with the markets?
Yeah, so it's no secret on your guys' show. I've said if there's going to be more downside, timing says it's going to come in Q4. So if we're going to get that, it's going to be then. However, there is an opportunity here, I think, in this range to put in a low that people aren't looking for, potentially. But a lot of that's going to depend on if the Fed pivots. And so if the Fed doesn't pivot, I have no reason to think that we won't go down to the final targets at like 12 and 10K.
Let me ask you this. Is the Fed able, and I just don't know because we see so much insider trading actively happen. Is the Fed able to trade like they know, like Jerome Powell knows what they're about to do? Is he allowed to trade that information?
No.
So
I would know.
He can't be active in the market because Nancy Pelosi sure as heck can. So I don't know who's allowed.
I mean, he might be active in the market. I don't know. I mean, Nancy Pelosi does what she does. She just sold all her Nvidia like a few weeks ago before they tanked. So
her husband.
They would never talk about anything in a
different room. That's not something that I'm really privy to because it doesn't really affect my life. If Jerome Powell is making a boatload of money on the side, I don't really care. It doesn't affect my trading. I just want to know what he's. Go ahead.
No, I was just going to say, in just regards to the politicians, I just want everyone to understand, like, they're no better than retail investors when it comes to trading, right? So in a bull market, they look like geniuses, and in the bear market, Nancy Pelosi's husband's getting crushed. I mean, so there's all these conspiracy theories. Oh, she knows what's going on. They're human, and then therefore they're emotional, and they're going to react to the same thing that everyone else does. So you don't have to worry too much. Now, it doesn't mean that sometimes there's not inside information they're privy to that they may act on, but in general, they're retail John Q. public.
It's funny because I make a statement. I always tell people, I'm like, I could put out daily videos and probably tell people where price is going to go, like within a certain variation, and people would still mess it up. So even if they have that insider information, if they don't have any handle on actual trading, like it's kind of like you were saying, like they're probably no better than retail public at that point.
Yeah.
Gareth, what are your kind of thoughts on between now and the end of the year? What kind of feelings do you have on the market?
So yeah, I'm in Magic's camp that I do think we see further downside. I think right now everyone's kind of expecting we're going to break down. So it makes me think we might get a short-term little snap back up, get people a little bit more bullish, get sentiment on that bullish side. But I still think, I mean, it would shock me if this bear market bottomed here at 70% decline when every other bear market, while the Fed was actually printing money, was down 80 to 85%. If anything, this one should be the worst one of all. It was definitely one of the craziest ones for altcoins and some of these runs on Shiba and Dogecoin. So I think minimum 12, 13,000, worst case 3,000, 3,500, which would mirror the Amazon collapse. And again, that's a worst case scenario.
Let's go.
If you I'm in for it. I'm strapped in. Amazon during the .coms, it was 95% drop. Now remember, Amazon went down 95% to like $6, and then it went to 3,300. So I think the important thing to take from that is that if it goes to 3,500, that's not the end of the world. It just may be the best buying opportunity of your life, like you buying Amazon at $6 before it went to 3,300. So just be ready. Bear markets are brutal. They will surprise even me and most of us.
Yeah. Blood, you kind of thinking in the same camp? You feeling any different about what was just said between Magic and Gareth?
No, not at all. What Gareth said about a possible move up first, then back down, I can see that happening. Just because we saw the 3 taps on his last high that Gareth talked about, 19,500 or whatever. We've tapped that 3 times. That may be a triple bottom, and then we head up. And I mean, possibly, but overall, if you're talking 6 months from now, I think we are heading lower. I just don't see fundamentally anything that is going to make this a bullish situation for us. And even to further explain, in January, I'm hearing a lot of rumblings about January regulatory lockdown or clamp down on cryptos are coming in January of 2023. So that's another bearish fundamental thing that I think is going to hang over our heads here. So I'm not bullish at all.
Yeah. I tell you what, the most bullish thing that I've heard about the next 6 months or so between the three of you is that you all think it's headed down. And in my experience playing devil's advocate, when everybody thinks it's going one way, we have some fun possibly going the other way. But I would agree with you. I don't see, there's two, for me, mine's simple. And I've always talked about this. Mine's macroeconomics. Mine's looking at the state of our nations. Mine's looking at the state of the world. Mine's looking at the state of the dollar. Mine's looking at possible world wars. Talking just overall, life kind of is in a bad spot right now. That's part of why we have Danger Close Alpha. If you guys aren't involved, jump into our Discord. Danger Close Alpha has introduced the prepper community with the crypto and NFT community, and we are truly trying to get people set up to say, hey, it doesn't have to be something wild. It doesn't have to be government tyranny. It can be something as simple as a natural disaster we just saw in Texas and Kentucky. And, we pray for those families. Most people are not prepared should something like that happen. And so we want to encourage you, get involved with that. It's dangerclosealpha.com. That'll give you the whole rundown. Make sure you follow everybody on the panel, guys. This has been a freaking awesome show. Flow was awesome. You guys did a fantastic job. I'm really looking forward to see moving forward how these markets look. So
hey, one more thing, Keeper.
Yeah.
I got a discount for your audience. Debate Crypto 25. They want to sign up. I got them 25%. That's on till I think Monday.
And so where do they find that specifically?
Bloodalytics.com, baby. Bloodalytics.com.
Debate Crypto 25.
Yes, sir.
All right, you heard it here first. Debate Crypto 25 on bloodalytics.com. Gentlemen, thank you for being here. I look forward to having you guys on again soon. So thank you. Crypto fam, you could be anywhere tonight, but you were here with Debate Crypto. So we appreciate you. We love you if nobody's told you that before today. Just remember, question everything, trust nothing. Until next time, hodl like it's hot. We will see you soon.